Good day. Welcome to this presentation on Intel. My name is Matt. I cover the IT stocks for PSG Wealth. This report is going to cover our latest EIA report on Intel, which discusses the second quarter results for 2021. The results showed flat revenue and earnings growth, and management raised their full year guidance by $1 billion based on a positive outlook, which is supported by growth in data center and continued PC demand. In this report, we also discuss new management and their plans to increase the production capacity in the United States, for which they should receive a lot of support from government. We show that the risk-reward profile is skewed to the upside, and we'll go through our valuation, which leads us to recommend an overweight position on Intel. Just looking at the results in a tough environment, Intel did reasonably well. Revenues exceeded prior management guidance by $700 million. Net revenues and operating profit were down 0.5% and 2.65% respectively. Net income was down nearly 1%, and earnings per share was up 4.2%. All line items beat expectations. However, in the operating groups, there were some misses. Data center, which had a very high base in the second quarter of 2020, and Mobile, which is the autonomous driving unit. If you look at the performance has been pretty volatile over the last 5 years. There have been some big one-day drops as Intel has announced its difficulties with the latest chip technology and the resulting giving up market share to competitors. Their lost leadership and delays in technology is now known and priced in, and we think at current prices Intel offers some value. If we look at the assessment, they've got new management and are trying to regain leadership. Their IDM 2.0 strategy is an expansion of their production capacity while building new foundries in the US and Europe. And they're launching a foundry service which allows them to make third-party chips just like Taiwan Semiconductors does. The US wants to reduce their reliance on chips made in Asia because these chips are an extremely important economic necessity and a matter of national security. Intel is expected to receive significant support from government. It already has plans to build new chip factories in the US and is currently building its third of 3 fabs in Ireland. Despite losing leadership at the latest technology, they could regain it at the next generation of nodes. In the meantime, the foundry service could support growth, and there's still huge demand and application for semiconductors at the current nodes. We value Intel by using some of the parts. We use a median EV/EBIT multiple from the sector and apply that to the group's core. For the rest of the business, we use EV sales multiples, and we get an intrinsic value that is higher than the current market value, leading us to recommend an overweight position in Intel. If you'd like to place a trade, please speak to your financial advisor or contact the dealing desk. Additionally, the report on Intel can be found on MyBase. Thanks for watching this presentation. Please will you take note of the following disclaimer before we end off. Thank you.